Greetings. Welcome to our e-learning module on understanding the nonprofit audit process, ensuring financial integrity and accountability. In this session, we will explore what a nonprofit audit is, why it matters, how to prepare, and how to use the results to strengthen your organization's transparency and effectiveness. A nonprofit audit is an independent examination of your organization's financial records and statements. It ensures that your financial information is accurate, transparent, and compliant with applicable laws and regulations. Audits enhance credibility with funders and donors. They confirm compliance, promote transparency, and help detect or prevent fraud or financial mismanagement. Ultimately, audits reinforce accountability to your stakeholders. There are three main types of audits. Financial audits review your financial statements for accuracy. Compliance audits assess adherence to grant or regulatory requirements. And internal audits focus on operational efficiency and internal controls. An audit may be required by law based on federal or state thresholds, by a funder or grant agreement, or by your own internal policies or bylaws. Some states require audits when annual revenue exceeds a specific amount, so make sure to check your local regulations. Preparation is key to a smooth audit process. Close your books, reconcile accounts, and organize all supporting documents. Complete your year-end financial statements and coordinate across departments to gather needed materials. The audit process typically spans several months. 3 to 6 months beforehand, you will select the auditor. 1 to 2 months before, you will conduct pre-audit preparations. During the audit month, there will be fieldwork and staff interviews. And 1 month after, you'll receive a draft report. In the final phase, the board will review and approve the final audit for submission. The audit process involves several key roles: the external auditor or CPA firm, the executive director or CEO, finance staff or the CFO, the board treasurer or the finance committee, and program staff as needed for documentation and clarification. Auditors evaluate your internal controls, policies and procedures designed to safeguard assets and ensure accuracy. Examples will include dual signature on checks, separation of duties, and approval workflows. The auditors will test these controls for their effectiveness. Audits commonly require a wide range of documents. Financial records like the chart of accounts, trial balance, reconciliations, and AR/AP reports give auditors a clear picture of your accounting. They also review internal control policies, including procedures, approvals, and conflicts of interest forms. Finally, revenue and donor documentation, such as donation records, acknowledgments, and fundraising reports, help verify that income is recorded accurately and restrictions are honored. Auditors also examine grant compliance materials, including budgets, expenditure tracking, and time and effort documentation. Governance documents like bylaws, Form 990s, and your IRS determination letter confirm your structure and legal status. HR files, benefit plans, and timesheets help validate payroll accuracy. And operational materials such as insurance policies, contracts, and IT system records provide a full picture of organizational risk and support processes. During fieldwork, auditors examine documentation, test transactions, and conduct interviews. They may review samples of expense reports, grant expenditures, and journal entries to verify consistency and compliance. Communication is key throughout the audit. Expect an entrance conference to outline the process, ongoing questions and answers during fieldwork, and an exit conference to discuss preliminary findings before the report is finalized. The audit report contains the auditor's opinion on your financial statements. Unmodified or unqualified, also known as a clean opinion, means financials are fairly presented. A qualified opinion means mostly accurate, but with limited exceptions. An adverse opinion indicates major concerns, and disclaimer means there is insufficient data. Understanding the type of opinion helps assess your financial integrity. The management letter accompanies the audit and highlights internal control weaknesses or recommendations for improvement. It is shared with leadership and the board, but it is not part of the official audit report. Take these recommendations seriously. They are opportunities to strengthen systems. Both board and staff have essential roles in providing timely, accurate information, ensuring cooperation with the auditors, and addressing findings promptly. The board will approve and distribute the final audit once complete. Once the audit is complete, review the findings and develop an action plan. Update your policies, address control gaps, and share results transparently with stakeholders to reinforce accountability. Adopt best practices to simplify the audit process. Maintain organized financial records throughout the year. Communicate with your auditor early and often. Train staff on compliance, and review internal controls annually to stay audit ready. Avoid common pitfalls such as disorganized records, last-minute preparation, or lack of communication. Do not ignore recommendations in the management letter. Implement improvements proactively. It's important to understand the difference between an audit, a review, and a compilation. The audit provides the highest assurance and is the most detailed, but also most expensive approach. A review offers limited assurance at a moderate cost. A compilation provides no assurance, is generally conducted in-house, and is least formal. Choose the right option based on your funder requirements and organizational needs. Under uniform guidance, any organization receiving $1 million or more in federal awards must complete a federal single audit, one of the most rigorous audits an organization can complete. This package includes financial statements, the schedule of expenditures of federal awards, auditor reports, a corrective action plan, a summary of prior findings, and the management letter if one was issued. Together, these demonstrate strong accountability for federal funding. Useful resources for audits include IRS Form 990 guidelines, state charitable audit requirements, the Nonprofit Finance Fund, and the National Council of Nonprofits. These references will help deepen your understanding and ensure compliance. By preparing thoughtfully, maintaining transparency, and fostering collaboration, your organization can make audits a tool for continuous improvement, not just compliance. Thank you for viewing this e-learning module. Have a wonderful day.